Have you ever caught yourself pondering over the performance of your investment in the VanEck Semiconductor ETF, SMH, or perhaps contemplating other funds? Today, we'll begin by offering an overview of the VanEck Semiconductor ETF. Next, we'll delve into a comparison with two other major semiconductor funds, the Fidelity Select Semiconductors and the iShares Semiconductor ETF. Backtesting an investment of $10,000 has grown impressively. For the VanEck Semiconductor ETF, starting with the same initial balance lands adds up to $118,307. The Fidelity portfolio has risen to a whopping $156,389, while the iShares portfolio has reached $118,499. As we analyze these portfolios, we'll focus on key metrics that include the compound annual growth rate, standard deviation, their best and worst years, maximum drawdown, Sharpe ratios, Sortino ratios, and market correlations. Let's dive deeper into their performance. Delving into the metrics, we begin our comparative evaluation with VanEck Semiconductor ETF, SMH. The portfolio was initiated with an investment of $10,000 and arrived at a final balance of $118,307. The compound annual growth rate was 11.79%, coupled with a standard deviation of 27.61%. The best performing year saw a climb of 87.31%, while the least performing year saw a drop to negative 47.07%. The most significant drawdown was a substantial negative 64.60%, with the Sharpe ratio and Sortino ratio recorded at 0.49 and 0.76 respectively. The market correlation was measured at 0.78. Next, we look at Fidelity Select Semiconductors' performance. It started with an initial balance of $10,000 and achieved an impressive final balance of $156,389. The compound annual growth rate was 13.21%, along with a standard deviation of 28.24%. The portfolio's best year saw a rise of 84.99%, yet the worst year fell to negative 50.54%. The most substantial drawdown was a significant negative 57.76%, with the Sharpe ratio at 0.53 and the Sortino ratio at 0.82. The market correlation was measured at 0.81. Lastly, we move to iShares Semiconductor ETF. With a beginning investment of $10,000, it reached a final balance of $118,499. The compound annual growth rate was slightly lower at 11.80%, with a standard deviation of 28.16%. The top performing year noted a growth of 80.95%, while the least performing year recorded a drop of negative 51.69%. The maximum drawdown was notably higher at negative 61.63%. The Sharpe ratio was 0.49, with a Sortino ratio of 0.75 and a market correlation of 0.80. This analysis, we can see how SMH stacks up against its competitors in terms of risks and returns. The VanEck Semiconductor ETF, also known as SMH, grappled with the highest drawdown, peaking at 64.60%. Now, examining the Fidelity Select Semiconductors, they faced a maximum drawdown of 57.76%, showcasing the undeniable risk of investment losses. Lastly, the iShares Semiconductor ETF encountered a drawdown, albeit slightly more severe than Fidelity, at 61.63%. Now let us shift our gaze to recovery periods. The SMH portfolio's drawdown period stretched nearly 7 years, concluding in February of 2009. It further required an added 4 years and a month for recovery. The subsequent steepest drawdown was significantly shorter, enduring only 9 months, with recovery consuming an additional 10 months. The third and fourth steepest drawdowns, both occurring in the latter part of the 2010s, each witnessed a recovery period of only a handful of months. Similar patterns of drawdown and recovery can be observed in the Fidelity and iShares portfolios as well, with some periods extending for a number of years, whilst others making a comeback within merely a few months. Drawdowns are a crucial part of investment risk. Knowing how SMH and its competitors have weathered past market storms can give you an idea of what you could experience in the future. The influence of expense ratios is critical too. Let's break down their effect. SMH records an expense ratio of 0.35%, with Fidelity Select Semiconductors documenting a slightly steeper expense ratio of 0.69%. The iShares Semiconductor ETF best ratio is 0.35%. Sometimes it's worth paying a higher expense ratio if the returns are better consistently. Now, let's pivot to understanding the concept of dollar-cost averaging strategy and how it can affect our investment decisions. For instance, for Fidelity Select Semiconductors, when compounded over time, resulted in a balance of more than $10 million, a compound annual growth rate of 36.78%, and a money-weighted rate of return of 19.54%. As we can see, even small differences in expense ratios being worst, the compound annual growth rate increase can have a significant impact on your returns when compounded over time, especially for SMH, ending up with a balance of around $8 million during the 20-year time. Let's delve into what awaits SMH in the forthcoming years. The SMH portfolio is forecasted to continue its upward trajectory. However, investors must be prepared for periods of volatility. And remember, investing is a long-term game. Stay informed, stay patient, and stay disciplined, especially if you're investing in SMH.